Welcome everyone. Welcome to Hidden Edge episode 39. Man, it's been a long time, but obviously this is going to be a Patreon exclusive. Going to be talking about a bunch of stuff that we would not talk about on other streams and stuff, and give you guys some nuggets. But man, it has been a long time, Mr. Patel. How are you doing, man?
Good. I have a question. Do you have noise canceling on your side? Because I think
Why
I'm
would
hearing
happen?
like a small hiss. No. Do you
Where
have that on, like echo cancellation and noise suppression?
is this thing?
Like go to your
Oh,
audio, go to your audio on your settings, and you should be thing for noise suppression.
let me
See
see
that?
here.
I don't know, just to make it as clean as
Audio.
possible.
I do have it. I do have it.
Okay. Oh,
High resolution audio. Is it better?
whatever, it works. It's just
You hear
like I said,
hissing?
well, it's not hissing. I can hear the background basically. Like,
Oh, you mean you hear
know.
my wife and everything in the kitchen?
Yeah.
Oh, it's
Yeah.
all good. It's all good. You're.
It's all good.
Oh,
It's all good. Doesn't matter.
oh, you had the
All right.
letter I there instead of a pipe. There you go.
I don't know how to do the pipe,
Um,
man. There you go. All right, cool.
all
You're
right,
able to
all
fix
right,
it.
all right, all right. So let's see here. Guys, this is the first time we're using Restream. We've been using StreamYard for quite some time, so Restream is actually pretty cool. I'm not gonna lie, I kind of like it. I'm just gonna mess around with these settings. So, pardon me if we got a little bit of stuff. But how did they embed this thing here?
Dude, I don't know.
Interesting.
I'm looking at it. It's
Interesting.
kind of nice. There's a lot of presentation stuff here.
Oh
There's
yeah,
yeah,
I do that.
shortcuts.
Oh, this is dope, man.
All right. You're getting too
Oh,
excited.
interesting. Yeah, I know, and it's a Patreon only thing, so you know. But anyways, I don't wanna waste your guys' time. I'll fiddle with that one later. Uh, but I mean, what's in the agenda today, man? I mean, it's been a long time. I think I think because you know Kris has been out for some time, taking a little bit of a break. It's the summer, everyone's off. For me, you know, I really just been enjoying life, right? But I'm still busy as hell. But to be honest, I mean, the Discord community is growing pretty strong. I'm not gonna lie. Like, it's not growing in terms of scaling out, but it's growing in terms of like the presence of people here. And one thing that I want to start out is like just a little bit of housekeeping here, right? So we have some newcomers here, which is great. But Kris and I just wanted to kind of preface, you know, a few of the things to kind of keep the community like tight, niche, and everything, but also like set the expectation here as far as like what you can expect as a member and things that like we're really good at doing. Right, Kris and I are really good at doing DD, picking some winners when the price is suppressed, and so on. And it really makes it enjoyable for ourselves because you know obviously making money is a great thing, but I mean nothing brings really me more joy than helping people, especially making them money. I mean, I hope I'm helping you guys, making you guys money. I hope Kris is helping you guys, making you guys money. But you know, so yeah, so I mean, shout out to all the folks that are on here live. Shout out to Mike T, George Mancini, Heinzie. Can't. Oh wow, what? Yeah, man, we got the
Wait,
late night shit. Like,
how are you keeping this private? Because I just got an alert on my YouTube saying that you were live.
no way. I put it as unlisted. Yeah, it's unlisted.
Well, I don't know. I got an invite, so 31 watching. Whatever. Who cares if it's? I mean, we care. It's supposed to be a Patreon exclusive, but if it's not, see, look,
That's weird.
it's on the main page.
Let me see something here real quick.
Welcome. This is supposed to be
public. I mean,
this was supposed to be a Patreon exclusive. It turned into a YouTube exclusive.
hold up. Let me see here real quick.
The stream is a public live on your
How is
channel.
this live? What in the world? I had it as unlisted. This is what I always do. Like you can't see it. You have the link.
Well, guess what? It's not. Whatever, man. Today's episode is going to be YouTube also. So
okay, fine. So it's gonna be YouTube also. All right, fine. So,
well, the next time we'll do Patreon exclusive.
No,
right?
we're gonna do a Patreon exclusive. But if that's the case, then I can't. I don't know if I could do the restream. Maybe I have to figure out some other platform to do it from. Because I certainly wanted to. Like YouTube is the most widely available to everyone.
We could do Zoom.
Yeah, so this is gonna be public. Like, I'm sorry. Yeah, we could do Zoom or we could do some other way. It's just easier doing it this way because then it just goes like straight online, But I don't know, whatever. I guess this is gonna be public, but I mean, I guess it's also good, because it's like if it's gonna be public, I'm not gonna say like specific positions I'm in. All right, I'm sorry.
I'll
And I'm
say them.
also
I'll say them. I'll say
no,
not
don't
you.
say them.
I'll say mine. I'll say mine. Because I mean,
Okay,
come
well,
on, man.
you could say UNH because UNH already ran and we got everyone in the beginning, But certain things that haven't ran for me yet, like I'm not going to say those positions because I don't want to start like talking about stuff publicly when like people are paying for it, whatever. Like I don't want to do that. Like I'm not about that life. Then I guess we can't play Chappelle Show clips then. So no Chappelle Show clips, Kris. No content like that.
Hold on. Were you sure about that? I want to.
No. You play that. I'm gonna block that stuff because I do not want to get it kicked out. Anyways, words. Jeez. Yo, what's up, man? What's up? Is that a super chat or did he just like say super chat in there? I can't even tell. Did he just did ETF FaceTime home just say super chat?
It doesn't.
No, I'm
just
kidding.
Matter.
Yeah, appreciate ETF FaceTime. So, anyways, we kind of wanted to kick it off a little bit. I mean, I guess we might as well just like say like what we do, right? Obviously, Kris, you've been public around for a long time. For me, kind of a little bit maturity state, a little bit later on to you. And thank you again because you helped encourage me to start making my DD public and start putting my stuff out there, which has done great. But, obviously it's a bull market, so everything's working. But you have to really admit that the positioning that we kind of do is that we get in when the position is suppressed and we get in with like strong size or strong leverage, right? So even though, yes, we're in a bull market, timing still really matters a lot in these cases because you have a lot of things like, let's take UNH, for example, right? You could have started going in your spreads when UNH is $400 and pulled back from 500, right? And then you would have been screwed the whole way down with the timing of like doubling down and everything. That's what really matters. For me, I could bull markets work all the time, but then we would have been sitting on grab for a long time when it didn't work, which we did do. But then now it's like above $6, and now it's starting to get like a lot of recognition. But like we've been banging the table on grab for a long time, so there's many more of that stuff. And I mean, I'm not going to say the other position that the crew knows in the community because I don't really want to talk about it, to be honest, but. GitLab is one I was pounding the table on, and it's already about $50. And there's more than a few things, man, especially with the cybersecurity stuff.
So before you go any further,
yeah.
The first thing I think we need to clarify is what kind of investor Sam is, what kind of investor I am, and what are the opportunities that we see and why we complement each other, why the opportunities that Sam is find, how he finds them, and then how I find my opportunities. So the first thing is we both work in some form of IT. I work primarily managing healthcare applications, right? So anytime you go to a hospital and you're dealing with radiology, they have a whole list of applications that run. I have a clinical background that I've translated that into some IT work and been able to kind of bring that together. So my background is actually more in healthcare than it is in IT, but I've been able to kind of combine both aspects. And now I'm sort of a guy who wears multiple hats. But my investing journey started way back when my dad lost a lot of money in the year 2000. It always gave me the itch to figure out, like, what did my dad do wrong? And over time, I've made my own fair share of mistakes, but I've learned from those mistakes. And I've developed custom strategies over the last 12 years that have allowed me to find opportunities where other people don't see them. And then, of course, share those opportunities with you guys. My portfolio tends to be more I have a 3-bucket system where I have one bucket that's long-term, one bucket that's like medium-term, and one bucket that's literally just tactical plays when something gets super oversold, right? So the long-term bucket is just index funds like the Fidelity Contra fund that I have in my mutual fund with my retirement funds. That is like just, it's like it does a little bit better job than the S&P 500, but it tracks the best companies out there. It's got an active portfolio management, and sometimes I'm tactically in certain sectors as well in the long term portfolio. The medium term tends to be things that I know that are mean reversion potentials that are going to happen over the course of the next 2 to 3, maybe sometimes 5 years. So if you look at like the companies that I'm looking at right now, the healthcare companies, right? I believe that right now we have bottomed in regards to the managed healthcare sector. Now, what does that mean? That means that I think, that's the place you want to be. Just like I said the same thing about regional banks. I remember when I was doing Finance Junkies, I would be talking about regional banks and people would be like, "What are you talking about? Like, why would I want to be in a regional bank? What is the value of being in a regional bank?" And now people are starting to see, like, wait a second, no, these are real businesses that generate tangible revenue. They had some bad quarters, but eventually it recovers, right? So in my short to medium term portfolios, you'll have companies that have those mean reversion potential. And my short term tactical trades are typically one combined with mean reversion, where something has gotten so oversold that it's just a freaking deal. Like if so, it's almost like someone saying, "Hey, I have this bar of gold. I'll sell it to you for 50 cents on the dollar," because the guy doesn't believe that gold is valuable anymore. And me, I'm like looking at this like, wait a second, gold is valuable. I'm going to buy it. Right. And so that's the quick plays. That's also where I do things that are more Chris Camillo type, where I do more social arb, where I'm looking at certain trends and I'm saying to myself, wait a second, this trend makes a lot of sense. And it's worth kind of getting into. So, if you guys have been in the Discord, like with Open Door, I am not a believer in Open Door. All right. Don't get me wrong. I think Open Door is a really shitty business model, but I also see the interest from the retail base on Open Door. That's why I said, hey, let's do those $5 and $10 spreads on Open Door.
You still in there?
Bro, no, I sold out because I'm not a believer in Open Door, but some of the people here are. I made a quick like 200% on my position and I'm chilling, right? I didn't go like balls deep, 25% of the portfolio. I did like barely like 0.5%, but it was a great move because I just got double my money. I got almost $30,000 out of the whole thing. So now I can take that 30,000.
0.5%, you double your money. So,
yeah, it's doing the math over here.
So let's say you're a billionaire, basically. All right, cool.
No. So I was able to take that money and just put it into other things, right? And so that's what I tend to do. I just find opportunities, and that portfolio is like the degenerate gambler side. And that's the thing about investing. You have to just make sure that you understand that your entire portfolio can't be degenerate gambling, nor can it be just 100% long term.
It can be,
but it's not a smart idea. Or it can be, or it can't just be 100% long-term S&P 500, because if you do the long-term S&P 500, you will make money over the course of the next 20 years, but you'll never get to the point where you're outperforming the market, right? So one of the ideas that I had with Matt, I was like, what if we did like a portfolio in the future, like an ETF that was like 75% S&P 500, and the other 30% we just find tactical trades that or stories that we believe in. That way you could just always outperform the market, right? But it's like I said, it was an idea. But right now, I think from a Patreon perspective, the best things that we can do is say, look, here's the due diligence that I'm doing on a current play that may or may not work out, and this is the targets that I think this company can hit, and this is the strategy to maximize upward gains, but also mitigate some of the risks. So my thinking originally when it came to investing was, if I can make 15 to 20% on a per year basis, I am good. Like that's what I'm gonna strive for. I'm starting to realize if you try to aim small, you're gonna stay small. So now my entire mindset has kind of changed a little bit. And now I'm always looking for like, okay, how can I outperform the market by taking as little risk as possible and get the maximum amount of reward possible? And I used to think that wasn't possible until I realized that no, if you know the correct option strategies, you can actually mitigate your downside risk significantly, but maximize your upside risk significantly as well. And, that's what call debit spreads are, so. Yeah, that's my investing style. I'm sure Sam can explain his thing.
I mean, I just YOLO into zero DTEs every day, and
no, he doesn't.
I just bet on football games every Sunday, Monday, and Thursday night, and I make money
doing that, man.
I do. It's all I do. It's all I do. But for real, guys, I have a degen side. I can't help it. It's an itch that I need to scratch sometimes. But one thing that I've learned is that I do it, and I manage the risk when I do it, right? So if I'm doing it, it's like really small position, but portfolio has amassed a certain size where a small position could be a decent amount of money, right? So I scratch the itch like that. If I want to get in a zero DTE, or if I want to do something crazy, like it's a small position. The things that oh, dude, of course, man, all of us have a degen side. But the thing that I do is that I'm mostly focused on building a long-term portfolio when it comes to big size positions, and I generally do it in shares. The reason why I do it in shares is because I am trying to build a wealth basket of a bunch of assets, diversified assets, right? But my specialty, because my background has been in IT for the last 15 years, I work as a software engineer and a DevOps engineer today, mostly focusing on infrastructure as code and AI and stuff. So like I'm the guy who's putting a lot of people out of jobs, unfortunately, but I mean, that's what pays, right? So it's high in demand. But through that, I work with a lot of pieces of software. I work with product teams, I work with software development teams, engineering teams, management, and so on, that I kind of have a good understanding of how the software world works, what doesn't. I kind of figure out if something's a good app just by looking at it and using it, like Duolingo, for example. I'm publicly bullish that stock, so I don't mind talking about that one in here. It's a really good app. It's very addicting. I've been using it every day for over a month now, and I'm learning Spanish, and it's great, right? And the way that they attack it is great. And I have the free tier, so I see all the ads and everything. Like I can understand these things because I'm an avid software and IT user. I dissect it even at work, and I troubleshoot it, and I understand where people are coming from when they're using these products, and I understand what they need. Right? Like it's very easy for me to pick up an app and see like this is just not going to work. Right? I see it all the time, and then guess what? In like 3 or 4 years, the app is basically gone. Right? And then you see really good apps that are out there, which is just like it is such a mundane. It is such a commodity, but it just works so good. Like I kind of recognized that with Robinhood in the beginning, but I didn't actually start investing in Robinhood when it was like the 15s, 20s, and 30s, and so on. But I also do the same thing, like where I have a big position in shares, but if I really see a lot of asymmetric reward upside, I go pretty big with call spreads, debit spreads, whatever it is, or naked calls. I sell put credit spreads sometimes if I really think that the reward is asymmetric to the upside in a very short term period of time to realize like very big gains. I do that periodically, and the thing is that what I mostly have done in the past, probably like before a couple of years back, was not like I wouldn't do it in size. And today, I built the conviction where I do it in size, and I really do believe in something, and it's extraordinary seeing something work. And it's not just like we're in a bull market, guys, so everything's going to work. To be honest, in a bull market, everything works, but certain things present an opportunity where they work really good in a very short period of time because the asset is just that mispriced. We've had more than a few that we've talked about publicly. My latest one is NBIS, but also there was a new bank as well. I was extremely bullish on that one. The beginning of the year, it was trading under $10, and today it's at all time highs, man. Like I still freaking remember, like just. I wasn't really complaining. I wasn't really frustrated, but like there are a lot of people who got so frustrated. Nubank, it's like it's not going anywhere. The market's going, it's not going anywhere. And same with Grab, it's not going in. Like Grab was like the perfect example. That thing was basically between like 450 and 550 for like over a year, right? And look where it is now. And now it's getting popular. Like that's really what we do. We find the things that some people are talking about. Usually there are some people talking about it. But then like it really gets popular because when the price goes up, that is when sentiment follows. Every single tweet, you and I are very bullish on BMNR, right? You know how much crap there was talking about that when it was in the 40s? And now it's this hot stock, right? It's like, This is the same thing that happens all the time. And we've done it so many times. And this is just the way the market is, right? And I don't want to get too high and mighty because we saw what the FOMC meeting was today, so we can talk about that as well. But I think a lot of it really has to do with sentiment positioning. If you have not everyone, but if you have a lot of people bearish on something like UNH a month ago, and you get like one positive catalyst on like a company that still is fundamentally not good financially wise, it's going to flip it around. And the market's going to front run it before it actually gets to the point where it's like, hey, this company actually made the rebound, because by the time it makes the rebound, the market already front ran that story. I mean, look where UNH is today. It basically went up almost 30-40% in the last month. And it pretty much bottomed, not before Warren Buffett announced that he was part of it, but it bottomed really on the worst day possible when it was in the 230s.
So just to add one caveat to this, for me, even though, and I'm sure that you guys here on the Patreon know about this, I post a lot of due diligence when it comes to certain like companies, why they took a beating, why they're down, what the potential is for this company to recover. I mean, if you want to, Sam, can you do me a favor? Can you go to the Patreon, to the main page, just log in and just show people the extent of the DD that we've done on UNH before we said, you know what, this is like the best company ever. It's a strong buy, blah, blah. So when it came down to it, it wasn't just, hey, listen, this is a company that's oversold and I'm going to buy it because the RSI is below 30. Like the RSI below 30 is great, because that usually means that, hey, things are really oversold, especially RSI in the 1 year time frame. Totally makes sense. But at the same time, there's actually fundamental reasoning behind this. It's not as simple as, oh yeah, you know what, UNH is good because it's oversold. So if you go through all of this, you can see all the due diligence that I did and I put out there, just showing like, look, they're using the same playbook as CVS. This is what they're doing. This is how they're going to change things around. And the thing is, if you're a business operator in this area, you know exactly what the value of due diligence like this is to building conviction. So everything that I said right here is the same exact thing that the hedge funds and everyone else started to use. So you can even see I published price targets on this thing to try to figure out, like, by the end of the year, it should be between 350 and 400. By the end of 2026, it should be between 400 and 475. And by the end of 27, it should be 475 to 575. You know, so this is the kind of stuff that I like doing, where if there are companies that are, can you bring that up one more time? Show the one with Carnival Cruise Lines as well, if you can. The reason why I want to highlight it is because it's not as simple as just, hey, investing based on some technical numbers. There are real fundamental things that the market may or may not be picking up on, that we're able to pick up on and actually do the work in the background. Sometimes it takes days, sometimes weeks. I'll be honest, sometimes it takes a month, because I do work a full-time job and I'm sometimes doing YouTube and all this other stuff. But let me tell you, when the reward comes in, the reward is handsome. So anyone here that's been in the Patreon, you guys know exactly. Yeah, like Kris has made me a fair amount of money in cash. Those children on their channels don't get it. So you look at this, the entire thing I actually went over. Like, okay, I analyzed their entire debt structure from the get-go. Literally from bottom up, saying, look, this is what their debt structure looks like. This is what it's going to end up being. This is how it's going to impact their future earnings. And I think this is fundamental analysis that it's very hard to find for a lot of investors. And this is, believe it or not, my bread and butter. Most of the money that I've made has been made because I've done due diligence like this and got into heavy positions and been able to say, look, these are the price targets that if we get to it, and look at that, look at the price targets. Is it not right there? $13 in 2024, right? 2025 right now is between 25 and 90. And by 2026, it's going to be between 25 and $40, which is exactly smack dab in the middle of the price targets.
Okay, so I wanted to bring this one up. Hold on. Yeah. I got to timestamp this just to make sure we have it. So I mentioned this before. I'm not going to hide it, right? We're in a bull market. Almost everything works, right? But the strategy is timing always matters, right? In a bull market, everything works. But like I said before, dude, if we were going heavy, if you were going heavy in UNH when it was $400 because it was a supposed dip, you would have been still underwater today, right? Mm-hmm. Unless you went heavy at 230, which you did. But like the risk reward was not as attractive as I remember before the earnings. You kind of went heavy. It was like around $300, and then it dropped after earnings, and then you kept on buying more and more until like the bottom, right? Yeah. So just because we're in a bull market, it doesn't mean every single thing is working. Most things are working, but the thing is to recognize when that opportunity is, and then as it goes up, you manage your risk by taking a lot off the table. So that is where this comes from, right? So if you have a bear market, right, it's very likely before that bear market happens. For me, I have stops with like very heavy positions when it comes to using leverage in long-term, short-term swing trades. When it comes to like something in portfolio, like I'll hold through the bear market, right? Like I've held Amazon through the whole thing. Like last April, I was basically holding everything, but I also knew that, hey, this isn't the time to get cute with a lot of these positions. I was in shares for most of April, with the exception of a couple of positions. I was just in shares because I knew, not that I knew, but well, there were a lot of things. The sentiment was very bad and it was getting worse, but also there was a lot of uncertainty in the horizon. And on top of that, the data was heading toward a worse position. And on top of that, the S&P 500 was trading under the 200-day moving average. When the indices trade under a 200-day moving average, like things get volatile. VIX was in the 20s and the 30s and even the 40s and 50s at some point. Like when that happens, like I'm not trying to call bottoms, right?
Yeah.
So when you say that you have to be in a bear market and survive before calling an investor, that might be true, but you also need to know how to manage risk and navigate bear markets. Like again, if we're in a bear market or if we're like in a major correction or something, I'm not going to try to get cute, right? So let's say we have a 10% correction in the next couple of months. I'm not going to lever up the entire portfolio. I'm going to wait until I get that confirmation that like, hey, we're kind of out of this crazy phase, i.e. we're trading above certain technical indicators and moving averages. It might be time for the recovery to happen. That is when I start going hard. But until then, as we're going up, yeah, I've taken profit on more than a few things. What was it with Oscar? Oscar, I was buying in the 15s and 14s. It wasn't a huge position, but I went in with Leaps, 2026 Leaps, because it was just you saw what was happening with the healthcare system. You saw what was happening with sorry, what are the names of benefits? I forgot the exact name of it, but you saw what's happening. There was a lot of negative sentiment. They were taking away all those benefits away, and people wouldn't be Oscar. Most of Oscar's clients are basically people who have the that welfare benefit. I keep forgetting what it's called.
Medicaid.
I get it.
No, ACM, Obamacare.
Yeah. Okay. So that was not going away. And once the market realized that wasn't going away, that's when Oscar just ripped. And I sold pretty much all of those spreads when it was above $20, 19, $20. And I was taking profits on the way up. So now for the most part, I'm sitting in Oscar shares. I do have a small amount of Leaps left, but like I'm managing the risk as it goes up, right? And there's enough time when we buy our positions where it's like we can get out, if things don't really turn out the way that we want to. And that's happened before, right? And then there's also times where we're wrong. I've been wrong so many times. The thing is that when I'm wrong, I cut my loss. When I'm right, I'm very right. That's the whole point of it, right? Like you're never going to be right all the time. So I think that is a way to address surviving in a bear market. I'm not saying that I will definitely survive in a bear market. I'm just saying that like, well, I could kind of put my finger there and be like, yeah, it doesn't really feel too safe right now. I'm not going to try to get cute with leverage, right? But other than that, my long-term portfolio, like, dude, I will sit through a bear market because guess what? I don't need this money until I retire. So I'm going to keep going. I'm going to keep on buying. That's just all I'm going to do. So like, that's kind of like where the edge is in this case. I don't mean to be cliche, but like, it's kind of where the hidden edge is. But anyways,
Nice.
Yeah, no, I slipped that one in there. I apologize. I had to slip that one in there. Hold on. I'm trying to do the timestamps now because a lot of the folks asked for it. So I want to make sure it's ready. Okay, so there are a few things that we want to talk about. I feel like the elephant in the room is FOMC. Okay.
Mm-hmm.
But I think the bigger elephant in the room is why didn't the market drop? Okay. Should we pull up the dot plot? Actually, before we start,
pull up the dot plot.
Yeah, okay, I'll pull up the dot plot then. But while I'm pulling this up, give me your synopsis on what you thought about FOMC, what you thought about the whatever was in the dot plot, and what you thought about the speech.
I think Jerome Powell was very like hesitant to declare victory on inflation. But the data that I'm seeing is saying that inflation is done, and we've actually got massive amounts of disinflation coming our way, primarily because of shelter, labor, and energy. So the three main drivers of inflation tend to be those three things. If you have a lack of workers but an increased amount of demand for, for goods and services, that's going to end up creating wage pressures higher, right? Right now you're starting to see unemployment rise, and at the same time you're seeing a lot of companies starting to cut back because of AI and everything else. So that's one thing that's happening. So labor market is deteriorating. So that's one of the inflation pegs that just got kicked out under them. Energy prices, because of the nature of energy, they're volatile. If oil prices go to $200, I don't care how much you raise the interest rates, you're going to get an inflation spike, right? Because energy plays into everything, whether that's plastics, because we have a carbon-based economy, whether that's transporting things from point A to point B, all of those costs get added into the final cost of production, in which case now inflation is going to roar. Well, guess what? Energy prices are at like a decade low right now. Literally, oil is trading at $65 a barrel. Natural gas is down to about $3 on Henry Hub right now. So energy prices are actually meaningfully lower than they were when we had this huge dramatic spike during the Russian war, Russia-Ukraine war situation. So energy prices are staying mild, right? So you got another inflation peg that's been kicked out from under it. And then the last thing is shelter. Shelter, you're starting to see a lot more inventory coming onto the market because people are getting to the point where all of these basically COVID era supports, they've all been taken away now. You had all this extended benefits when it came to student loan forbearances. You had moratoriums on people with regards to foreclosures, where if you didn't pay your mortgage, there were something called workouts that they were doing with FHA. All of those programs are done. So now the consumer is like, no, you need to get back into work mode. So all of that discretionary income is being pulled away from the current consumer. And what is that going to do? That's going to cause disinflation. And the one last thing, which is probably actually two more things that are more tertiary, but that are very important, is you're deporting a bunch of people. Like right now, according to the DHS, because I just saw the tweet about it, 2 million immigrants have left the country. 2 million people have left. What does that mean? That means that's 2 million people that don't require as many haircuts, 2 million people that don't require shelter anymore. Because guess what? If you were renting before, I mean, yeah, you may not be owning a home as an illegal, but you're renting, you're staying somewhere. Well, guess what? They're no longer there. So now you've got vacancy rates starting to climb in a lot of the areas where they were once dominated by a lot of illegal immigrants, right? State and local governments were just pumping in money in order to support a lot of these NGOs that were basically, doing hand-to-mouth services for a lot of these illegals that were coming in. Well, now the local governments don't have that kind of money anymore, and the federal government's not about spending that money anymore. At the same time, you're also seeing the federal government kind of withdraw a lot of support for Medicaid for illegal immigrants and everything else. So there is a lot of money that the Biden administration pushed into the market that kept inflation higher, but now is sort of getting all of that monetary support is getting pulled back right now. Now, if that wasn't enough, you've got the additional pressure from AI. AI is a huge productivity driver for a lot of industries where it took them 5 days to accomplish one goal or one task. Now they're doing it in minutes at sometimes because of what AI does. That is hugely deflationary. So as of right now, what I'm seeing is we're at a point where deflation is going to be taking a hold of the current environment. And in that regard, we want to be in companies that, one, can benefit from lower inflation rates, and also at the same time take advantage of the lowering of interest rates to kind of refinance their capital structures, because a lot of companies, they were harmed during that time. During the last few years, when we had this sudden spike in rates, their entire business model, if your business model is making 10% per year in net profit, and all of a sudden now your capital costs go from, let's say, 2% to now 6% because of increased interest rates, your profit margin drops significantly. So now if you do the opposite and you start to lower rates, your profit margins start to expand again. And so this way you benefit. So right now, rate support is a big deal. The challenge that you run into here is that according to the FOMC, what their price targets are, they're expecting inflation to stay higher for longer. And because of that, the federal funds rate that they're projecting is going to stay a little bit more elevated for a longer time. I think this is wrong. The summary of economic projections, this thing is so fucking BS. In my opinion, this thing, I would not give it even a remote chance of happening. All right.
Yeah. I mean,
all these guys are doing is forecasting based on today's information, but they don't take into consideration what's actually happening on the ground. Sorry, go ahead.
Well, that's what the true alpha is. When you're able to see where it's going, because the Fed is always going to be late, right? They're data dependent, and data always lags, right? The data that they collect is always lagging data, so they're always going to be late. But at the same time, I think it's for a reason. I think that I don't think the Fed is doing a bad job. I think they're doing a good job. Obviously, there's times where they especially could have performed a lot faster or quicker or more ahead of time. Like it's pretty late to cut rates. They should have started cutting rates before, and that's the reason why they're jump starting it. At the same time, they wanted to wait to see the effects from the tariffs, but I think the market kind of knew, and we knew that there's not going to be really much of an effect from tariffs in terms of something long lasting or stickiness for inflation. I think we've been saying that there is disinflation coming. I don't think there's deflation coming. You can already see in the dot plot, they don't expect deflation coming. So deflation is when you have negative rate of inflation, or CPI. Disinflation is when you have decelerating. So you go from like 3% to 2.8%, 2.5%, and so on. That is where we're headed. And I think that even if they cut rates now, and even if they do quantitative easing, which they haven't done yet, it's still going to persist. We are going to see disinflation continuing. I don't think that we're going to go below 2%. I think it will still remain pretty high, but I still do think that there is further weakening of the job market. However, the topic that you brought up, though, in terms of AI making things more efficient, it is making things more efficient. But I think I'm not so sure if like the negative impacts of jobs because of AI. I think that's going to take many, many years to actually happen. We're seeing it happen today with a lot of mega cap companies, but like that's not going to it's not going to have any dramatic effect probably at least for like another 2 or 3 years. But at the same time, like it's coming, right? It's coming. 2 or 3 years is going to pass by very quickly. I do think though that probably the most surprising part for me was that I always thought we're going to have 3 to 4 rate cuts this year. The market was pricing in 2 rate cuts. When this Sept came out, it basically said we're going to have 2 more rate cuts for the rest of the year. And that quickly got priced in. So there is the CME Fed funds futures that gets adjusted and shown on here. And in this chart, the way you read this is that you can basically see what the probability of how many rate cuts there are per meeting or whether there is a rate cut. If you click on December 10, 2025, this is basically going to show you where the rates are going to be at the end of the year after the last meeting, right? So right now we're at 4 to 425, right? So we were at 425 to 450. But if you look over here, the market is pricing 81%, 82% chance of 350 to 375. That means we're going to get 2 more rate cuts. The question is that going to be all in the next meeting or in the December meeting, or is it going to be 25 each? Right now, the market is saying it's going to be an 88% chance it's going to be 1 rate cut in the next one. And the one after that, there is an 82% chance it's going to be one after that. So the market thinks that it's going to be one rate cut for each of the remaining 2 meetings. The big thing about this was that, dude, look at this. There's an 82% chance it's going to be 350 to 3.5 to 375. Look at this part over here. Today, that's what it prices in, right? Yesterday, it was 70%. Okay. A month ago, it was 33%. Why didn't we have a major dip? Well, I don't think this is why you had it. I think this is a result of it, right? The market is pricing in more rate cuts. The market sees the rate of the rate cuts as the bullish factor, not the absolute value of rate cuts. The fact that the Fed is like, hey, we need to start cutting more rates faster, that means that something changed and the market needs to price that in. I'm not saying this is the reason why the market is not going down, but I'm saying that this is probably the reason why it went up, right? Because you're pricing in more dovish Fed moves. This is the whole thing behind this, right? You don't fight the Fed. 2022, people were trying to fight the Fed. The Fed was hiking rates.
Yeah.
And then we've been in a rate cut cycle since the middle of 2023.
Yeah.
Was it 2024 was the 2024 was the first rate cut in September. But the market was already pricing it in by when inflation topped in July and August of 2022. And it's basically just been going down since then. I posted this chart on X.
Mm-hmm.
All right. It's like, this just debunks like the entire stagflation concept in just two charts. So I overlaid them in the same thing. Stagflation. There is not going to be stagflation. You know why there's not going to be stagflation? Because inflation is coming down, and GDP is still here. Here it is, right here. So this is the core inflation rate, right? It's just been in a downtrend since 2022. Yeah, it's stabilizing, but it's just been in a downtrend. And we're under 3% about. We're probably going to go under 3%.
Yeah.
US GDP annual growth rate is above zero. If it's supposed to be 3.2%, 3.5% this quarter. That's what the Atlanta Fed is saying. If that's the case, where's the stag in that? And in that case, where's the inflation? This is normal inflation. 2 to 3% a year annualized is normal inflation. That is the Fed's target. They said it many times. So where's the stagflation? This is the reason why we're not in a bear market, because there is no stagflation. And the data has been saying it for years. For years it's been saying it. We're not slowing down into a recession. We're just normalizing. This is what the market does. It swings heavy in one direction, swings heavy in the other direction, and then stabilizes. We saw that with many companies out there. We saw that with Google when it just swung way further down than it should have. And then now it's swinging back up. I don't know where Google's going to go from now on, but I'm just saying, this is what the market does, right?
Mm-hmm.
I think that this was, I thought
Google
that at the end of
Google's a little special in that fundamentally their business was strong, but there was always that litigation overhang with the antitrust thing. So once that got resolved,
that was a big thing.
It was it's like, okay, yeah, now we can give it a higher multiple. And if you give it the same multiple as, let's say, the Microsofts of the world, you've got this thing hitting $300 very easily in the next 12 months, which is fine. Because I mean, Google is an AI leader. No matter what anyone says to me right now, sorry, Google is an AI leader. They got a diversified business. They're buying back shares. They're reinvesting everything. And that's why Google deserves to get a premium multiple to where it currently is trading right now. Because right now it's still, I think it's actually caught up, but on a forward basis. I have to look at what Google's forward.
It's caught up.
Yeah, so
it's no longer asymmetric anymore.
yeah. There's no asymmetric reward in Google anymore. So it's not like, oh my God, this thing gets to 300 by December. If that happens, it's because shit is just getting out of hand, And that's not to say that things can't go out of hand. It's just that's where it is. So, I don't know.
So I'll admit, I sold my Google position at 160, 150 something, and I bought Meta. Today, I would have made more money on Google than Meta. Yeah. Especially at spreads. Yeah, it happens. It's fine. And I'll admit that. I'm not going to hide it. Yeah, I did. But I wasn't bearish Google. I just thought that Meta was a much better bet than Google. And it was for a minute. And then that flipped around. And that's fine. That's fine. It's not a big deal. I mean, this is what I'm saying. I didn't short Google. I'm not stupid. Right? If the market's going to go up, Google's going to go up. I don't understand why people get so bearish a particular company to the point where they're going to short it unless they have really serious conviction or unless they foresee just general weakness in the market, right? I take it back because I just thought about something that you're shorting for a minute. No, but what I'm trying to say is like when you're in a parabolic bull market and things are just going up, like don't go heavy with the shorts. Like you will know when it's happening. Like you will have time to prepare, right? Like, but until then, it's just in meltdown mode, man. Like the market's just in meltdown mode. Like it's just we haven't had more than 3.5% pullback since April. Like, why would you short now, right? Why not? I know the good time to short. The short is when the SP 500 closed below the 20 moving average and stays there. Until then, I don't think it's a great time to short, right? Like that's when I'll start to get a little bit worried. But we haven't had that. Every time we've closed below the 20 moving average on the Qs and the SP 500, like we've just recovered back up, you know, and like they've just been buying opportunities. So that's all it's been. So, you know, I mean, go ahead.
Take a look at this real quick. So this is literally like the most simplest Google thesis, and this is why. Yeah. Do you see it? It's on the left hand side.
Oh, my bad. I'm getting used to this thing.
Yeah. Okay. So you can see here, this is Google's forward earnings, right? Like, so forward PE on Google. Typically, you can see when the markets are down, Google's PE starts to compress. The entire industry compresses. And when things get super bullish, the forward PEs tend to go the other direction, right? So we got overly bullish in 2021. So Google's forward PE was literally in the 30s, right? Then it dropped off in 2022 and started to recover. I mean, Google's still profit margins are expanding. They're still doing really well. But look at the sentiment that we had around April, May. Their forward earnings were down below 20. And usually whenever you see Google trading at below like 20, you know that there's opportunities in Google. So this was one indicator. So from a fundamental standpoint, this thing was undervalued. The second part to it that is very interesting is because on a technical basis, and let me just show where's this window? Okay, there we go. Do you guys, can you see my desktop, my Webull desktop?
I am sharing it right now.
Okay, so if you go to Google, let me just pull it up. Sorry. So if you go to Google, right, you can see that at this point it had pretty much bottomed. On a 1 year time frame, you're looking at pretty much everything that was telling you that this thing was oversold, right? Literally RSI in the 1 year was 30. It was literally in a death cross pattern, and then it consolidated a little bit, and here was like a really, really good entry point, and it made a lot of sense to be in it. And ever since then, which is literally June 30th, that golden cross has just freaking been a monster, and it's like one way up this way. Now it's getting to the point where it's getting a little bit overbought again, but you know, like this. So a lot of people are like, well, should I buy more Google right now? And I'm like, yeah, well, I mean, you know, I'm not saying that it doesn't have room to run a higher up. It's just from a technical standpoint, it's overbought. So a lot of information. It's, you know, it's not as complicated as people think. Like if you have a strong company that's fundamentally strong, it's growing its earnings, it's growing everything in the right direction, then, and at the same time, technically it's oversold, you got a pretty good shot at a mean reversion play.
So there's another chart that I want to bring up while we're on the top of charts. And this one's an interesting one. So here we go. Nubank. Man, I've just been uber bullish this thing since January, and I've actually been in Nubank since like $7, sub $7.
Yeah.
Courtesy of Tanner. He's the one who kind of told me, and you're the one who told Tanner about Nubank too, which is crazy. But I love it when so Nubank, it went all the way down to like sub $9, right? And this was like really interesting because this is like around the time when the market was around all-time highs, and like Nubank was just down here, and I was like, this is absurd, right? This is like this company's trading so cheap right now, and it's the largest bank in it has
Latin
the
America.
most. It is, well, not the largest bank of Latin America, but it has most of the population as its client in Brazil, which is just a major market down there in Latin America. But it's growing into regions in Colombia and Mexico. And like, look how many opportunities you got to like buy it. You got an opportunity here, and then went up above the 200-day moving average. This is the 200-day moving average. This is the 50-day, and this is the 20-day. And generally speaking, when things trade below the 200-day moving average, that's when it's like just extremely volatile. And when I was buying, when I was adding to like leaps and stuff, like I wasn't doing it down here, down here, and down here. I was doing it like here, 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 here. And it was like right around here because I had this trend line, this channel over here, and it was above the 200-day moving average, which is great, and it recovered here. This is good to see. And when it's above all the moving averages, it's when the chart is bullish, right? It was like around here that I told guys like, look, I'm buying 2226 leaps on this thing. And it's just been straight up since then, right? And it's great because the chart tells you one thing in terms of timing, but the fundamentals, when you have the fundamentals and the chart put together, like that's just a trifecta. Am I worried about this right here? Not really. Like I think the market is staying bullish. But if you start to creep back over here below the 20-day moving average, I'm probably going to set this as my stop for the rest of my position. But I've been slowly trimming as we're going up. But at the same time, it's like it's just a beautiful thing of how technicals turn out. And then another one. Go ahead.
So no, I was like, I'm going to share my screen too. If you could just show, and it's literally these patterns repeat themselves. As long as you know what to look for, you can do really well on these things. The only thing I'd say is you follow what Josh Brown says, right? And I love that quote that Josh Brown has. Fundamentals tell you what to buy. Technicals tell you when to buy.
Yeah. No, that's true. Yeah.
Most of your due diligence when it comes to a company should be on the fundamentals. I would say 80%, and the other 20% should just be like from a charting standpoint. Just look at the charts and see like, hey, what would be a good entry point for this company be? So if the fundamentals are strong and at the same time this is oversold, you've got yourself a pretty good chance of doing something right. And if anyone wants the Webull code on here, like how to actually like get these indicators, let me know. And I'll one of these days, I think that's one of the things I'm going to do. I'm actually going to just share this thing because I think this has been very helpful from a technical
standpoint. Get the hell out of here, man. A lot of people here are hood shareholders. You're trying to advertise Webull. Get the hell.
Not Webull, like the membership code. I don't care about that. I'm saying the actual like code to get the crossover, the EMA crossover.
You're trying to advertise like
this script.
Yeah.
No, I'm trying to hold on. Let me show you what I'm talking about real quick. Window, entire screen. This one, this code right here. This is written in something called Pine Script. So if you want to just share,
that's like the same thing that TradingView has. Interesting.
Yes, yeah. TradingView has Pine Script where you can actually just write the code, and so this way, all of this stuff is customized for you. So you can get like alerts, like, "Hey, Kris, the what do you call the RSI is below 30, and at the same time, the EMA is crossing in a downward death cross move, or the other way around, which is, hey, it's trading under a 50 RSI, and then you're at the same time you've got a golden cross pattern coming where things are getting overbought. I mean, not overbought, like there's buyer interest that's actually accelerating. So that's the thing, not the Webull code. I don't care about that. I'm dog fooding Webull, and this is like some of the things that I'm learning right now. So this is anyone asks like, oh, how do you pick bottoms? Well, this is one of the ways that you pick bottoms. You find some fundamental companies that are doing really well, and then you figure out like, okay, when is it oversold? And the key is, what time frame are you using to figure out that it's oversold? Is it going to be like, hey, this is oversold on a 1-day time period, or is it oversold on a 1-month time period, or is it oversold on a 1-year time period? And sometimes if you're freaking super lucky, look at UNH. Where's UNH? Right here. By the way, this is another thing I like about Webull. The watch list is actually really nice. UNH right here on a 5-year period. Look at this. Literally, it went down and it's now hitting to a reversal. Okay, so MACD is telling you, look, there's a ton of buyer interest coming in. It's going in the other direction. So yeah, man. On a 1-year time frame, you can see it kind of reversing here. So if this crosses over the what is that they call the 50-day crosses over that 200-day, boy, we got a golden cross that's gonna.
Yeah, no, that's a golden cross right there. That's gonna do wonders. Yeah, I mean,
Go
I
ahead.
think, oh,
Yeah, stop sharing my desktop. Let's see.
yeah. All right. So, I mean, I think that about does it for um, a lot of the fundamentals, technicals, and I don't want to talk about I don't want to talk about position. I'm really bullish on. So, um, I don't know. Is there anything else we wanted to cover? We're already at 55 minutes. I don't want to go too long.
Um, yeah, I mean, we're making some changes on Patreon. I'll give you guys a quick summary on things I learned at Robinhood Summit that has helped me understand some of the things. Number one, I am trying to grow my social media presence because I want to get in the door now to a lot of these investors that have information that you don't have access to until you actually meet people. Like the amount of people that I've met during Robinhood Summit that have like insights into this market is it's insane. And I think that's one of the greatest things that Amit has going for him is that he's got access to people that are in the know. And that is a level of alpha that's just you cannot find that on research websites. You know, rich people they talk to each other. And one of the reasons why the rich stay rich is because they're able to jimmy up interest in certain things and give insights and get that as feedback, and they're able to use that to arbitrage themselves into a higher position. So before I was more like, oh, you know what, social media is not really for me, I'm not going to really try to build that platform as much. Now I'm going to try to put more emphasis on it because I was able to meet a lot of interesting people at Hood Summit, a lot of people that know what they're doing in the markets, that have been able to really do well in these markets. And yeah, the wealth of knowledge that came across my in front of me was insane. So like I said, growing the social media presences thing, I know that you're working with the Wolf Research guys and some of these other folk to like expand your reach as well into the same exact thing, where you're getting to learn from other investors who've have these wide area networks, and then being able to take that and translate it into alpha generation for both the Patreon and the Discord. And you know, like I said, we'll share all of that information with you guys as much as we can. And yeah, that's the goal now, you know, and make sure that the due diligence isn't just basically fundamentals or just technicals. It's now finding information that's not public. You know, I know some people say that's insider trading. I'm not talking about insider trading. I'm like, here's an example: BMNR. I was not bullish on BMNR at all until like literally I sat down with someone at Hood Summit and they explained the damn thesis to me, and it's like I was like, wait a second, this makes a lot of sense. I was like sitting at breakfast talking with Evan and these guys, and I was like, ah, whatever, I'll just buy BMNR as a joke. And then that day, I went into like some of these meetings, and literally there was like Jason Calcanis was on the what is it called, on the stage with Vlad, and he was talking, and I was talking to somebody else about it's like, oh, what's going on, like what do you think about BMNR? And he gave me the freaking cleanest rundown of all the information, and I was like, whoa, wait a second. And I started to speak to like 20 other people, and dude, BMNR was all the rage at Robinhood Summit. Every single person I spoke to, I'm talking about people with 1 million followers, they were talking about BMNR. How do you quantify that in alpha? I thought it was freaking insane. So now the goal is, hey, get a little bit of notoriety on social media so that I get access to these things, and I get access to the invites to be able to basically do these information gathering exploration trips. I wish you were there, dude. You would have got to meet some of these people that are just freaking like, I'm talking about people like they show you your when you see their portfolio size, bro. It's like it's pretty up there. So yeah.
I mean, no, for sure, dude. I mean, I don't want to say it's a small world, but you got to be thankful to have access to this kind of knowledge. So yeah, I mean, can't really take things that I find out and spit them out verbatim, but I can express them. We already expressed them through DD. But yeah, I'm bullish BMNR. I I think it's fairly obvious what the thesis is there. And I think it's going to head there. Like I think without a question that we will. It's already happening right now. You're seeing a lot of stablecoins being used as a perpetual means of sending money to people with very low fees and very quickly. I think it's going to happen. I think that sending wires is something that's going to be archaic at some point, legacy at some point. And I think that decentralizing all of this is going to be a lot easier. And I think it's not going to be decentralized anymore once it becomes a standard. Banks are going to run it. Like the whole thing about decentralization was like people were very dismissive about it because like the banks wouldn't allow it. But then now, guess what? The banks are in, so now it's time to go, right? Like it's like things don't go until like the big guys are in, and it's like okay, now we can go, right? That sort of thing. I don't know. Maybe I'm just conspiratic, but I think April was a big setup. Like I don't think April was man made, and I think it was done for a reason. So with that being said, I think markets are going to go a lot higher. Where it's going in the near term, I'm not sure, but I'm pretty sure that the markets are going to be up a lot in the next few years.
We'll leave with you guys with one thing, and let me show you something. This is from Visa's website. Okay, not any shitty company.
Share the screen. Okay.
Yeah, this is from Visa's website. So literally, while I was at Hood Summit, someone said, "Look, let me show you the reason why I'm bullish on BMNR." I said, "Okay."
There you go. There you go, man.
This dude pulled up Visa's website. I said, "Okay, what the hell does Visa have to do with BMNR?" And he said, "All right, take a look." And I was floored by this right here. Visa has on-chain working with crypto wallets and everything else. They have an entire white paper dedicated towards this. But let me show you the main thing right here. Visa right here expands stablecoin support in settlements. Okay. Why is this important? Look at this. Why is this important? This means that now the entire market is starting to move into this space. And all of these things are being run on Ethereum's blockchain. Let me just go to one more thing that he showed me. I should have freaking wrote it down. But basically it was Visa stablecoin payment. Let's look at the map. They literally published this. I can't fucking find it right now.
Yeah, but we don't need to dig into this, dude. This is the thesis. This is the
Yeah.
thesis that I've been bullish on it. This is the thesis that you're bullish on. This is the thesis to everyone why. Everyone's busy looking at this stupid, like, oh, what's a NAV trading at? You know, what's this? What's this? Like, that doesn't matter. It doesn't matter what the NAV is. Tom Lee already said he's going to do 5% of the entire float, right?
Yeah.
He already said that. So he will dilute to buy more Ethereum until he gets 5%. And when he gets 5%, he's going to do these random ventures that he's been doing, especially with Octane, whatever it is. And like, yeah, he can't put that in the balance sheet because guess what? Look where Octo is trading at now. Like you can't, but like these are little things that he's doing. Like, I don't know. People think it's a scam. I don't think it's a scam. I don't think it's a scam at all. I think that people who think it's a scam are just saying that because they're missing out on it. And they're hoping that doesn't work. And I think that scam thesis is going to get stronger the more it goes up. It's exactly what's happening in crypto. This is exactly what's happened in the stock market. The only reason the bears get louder is because they freaking missed out, right? Because guess what? You can be bearish the whole way up, and you will be right at some point, but like then you miss the whole ride. I'm not saying go all in. I'm just saying that like bull markets go up 90%. Markets go up 90% of the time. Why would you bet on that 10%?
Yeah.
It just makes no sense to bet on the 10%. That's the reason why I always stay long. I always stay long all the time.
Yeah, this was another thing, like the image flow that like literally Visa's working on stable coins and all this other stuff. So the amount of things are going to be utilized.
I posted that chart on the on my Substack. I'm not active on the Substack anymore, but yeah, I took that exact chart. I had a whole Substack article on like why I'm bullish stable coins and why I'm bullish BMNR. I'm not active on the Substack anymore, so I don't want to start selling that thing. But yeah, like that's the reason why I was bullish all of it. Because the whole that's why I'm bullish a lot of fintech companies. A lot of them. Because I think a lot of them are mispriced right now. I don't think it's as mispriced as it used to be, but this is one of the reasons why I'm so bullish in Nubank, even more bullish in Nubank because of that. This is the reason why I'm bullish on Grab. This is the reason why I'm bullish on Mercado Libre, because these are in emerging markets, and they're going to adopt the things a lot faster than we will. Why? because they haven't built out the whole system yet. They can adopt it. That's why El Salvador can put their currency in Bitcoin, because it's not even built out yet. And this is the reason why this is probably going to be adopted in regions outside the US first. So,
Yeah.
anyways, I got to drop off because I got to wake up super early tomorrow.
Yep.
But
I need to get a better. I need to get a better profile pic. So now I'm looking at it, I'm just like, it's just me going.
I know. Me and Matt use
I'll
it
work
all the
on that.
time. What else am I supposed to do? There's nothing else out there. There's nothing else. Just give me a damn picture and I'll do it for you.
Yeah.
Just give me a good picture.
All right, I got you.
You haven't like that. You don't have to be in a suit or anything. But get a picture of yourself in the hood event. You didn't get a picture there?
I did. My phone died, so I didn't get a lot of stuff there. But I'll make sure I get you.
You know why your phone died? Because you have an iPhone 10.
Yeah, probably. That is true.
You need to get a new iPhone, buddy. Yeah.
This is so weird, bro. What is this? Built a fantasy football style. I'm pretty sure that this is this is like a scam, but I'm like, this is interesting. Hold on, let me just share screen. Look at this. This guy paid me 1 cent to build a fantasy football for a stocks app called GameStop, backed by early investors in Robinhood.
Let me tell you something, right? You see how if you scroll up, up all the way to the top, how it says it's from Venmo.com. This is scary because it used to say, okay, so you might have taken that out. That's a personal email right there.
I don't care, whatever. Yeah.
No, but they just set the reply to address as that Venmo one, so it looks like it's real and it's not. Isn't that scary?
Thank you for that penny, Anton.
No, he doesn't care about the penny. He wants you to click on see transaction and put in your credentials there, so that way he has your credentials to Venmo.
You spear phishing me. He's trying to spear fish me. Gotcha.
That's how all those things. You ever get like those pop-ups on your computer where it's like you have a virus, like that? That's you don't have a virus. You just have a bunch of spyware that's on there to make you click on it and put in your credit card information so they can take your money.
Yeah.
You ever seen Beekeeper?
Beekeeper? Oh yeah, the movie with Jason Statham.
Yeah, man, that's
where they're tricking old ladies into giving up their Social Security checks.
Yeah, dude, like kind of scary, man. This world is kind of scary. Like we haven't even seen the AI stunt yet. We haven't seen it. And actually, so I think Heinze asked, "Can I talk about cybersecurity stuff?" I was going to talk about it, but I mean, we don't have enough time for it. But I'm bullish on cybersecurity. But there's a specific name that I'm very bullish on. Very bullish on. Anyways,
I'm doing more research.
Oh, that mofo just dropped on me. He said I'm doing more research and he just cut it out. How dare you? How dare you, Mr. Patel? Anyways, there he is. He's back.
My bad. I was going to say before I close out, I'm doing more research on some other healthcare companies that have a good potential to recover. I'll post all of that due diligence in due time. I've just, like I said, been busy since I got back. So when I get onto that, I'll post it and then see if there's any plays that we can make. And then of course 2028 out now, and you know leaps, bro. Gotta go get me some of those leaps.
get on that leap, Kris, motherfucking leap man. Debit spread.
That's what
Kris,
I do.
Debit spread Patel.
People get pissed off. They're like, "Oh my!" Like I was. The one thing that sucks about the strategy that I use is that I do like debit spreads on leaps, and people are like, "Bro, now I gotta wait like 5 years. Not 5 years. I gotta wait like 2 years to get the full payout. I can't just get the payout now." And I'm like, "Bro, you're up like 200%." They're like, "Yeah, but this was supposed to like 7x." I'm like, 7x in 2 years is still a freaking good return. Like, what do you want from me, man? What do you want? So, yeah.
All right, buddy. Yep. It's been a good one. I will talk to you guys later. Good talking to Kris. Probably gonna do the same thing next week, but that one has to be a Patreon exclusive. It can't be
It will be a Patreon exclusive.
I dropped the ball on that one. I gotta make sure.
You'll figure out how to He'll figure out how to make it not. Otherwise, we could just use Zoom. You know. But
Yeah,
the only
we'll do
thing is
some other way.
Zoom also like craps out sometimes. That wasn't fun.
Yeah.
So we'll figure it out. We'll figure it out. All right.
All righty. Talk to you later.
Later, guys. Take care. Bye.